US and European share markets fell overnight, snapping a pretty good run over the past few days. Markets were a little bit disappointed with the news from several major US companies. Pfizer and Ryder Systems missed their profit expectations. Data is expected out later on this week on the US labour market. Many are expecting more people to have lost their jobs over the past few months, and this could be a bit of a drag on the US economic recovery. On the currency front, the New Zealand dollar has traded a little bit lower overnight, trading under 71 cents once again. The New York Times recently reported that China is consuming 45 kilos of meat per person per year, and this compares with around 125 kilos in the US. China is a long way behind the US, and in some ways, the New York Times argue that China is really driving a big shake-up in the food industry globally. Recently, Vale announced a $3.8 billion takeover of Bungie's Brazilian fertilizer business. This kind of shake-up is going on around the world, and we are seeing many companies trying to position themselves for the upturn in the food business. The food business is looking pretty good for the medium to longer term prospects. All indications are that demand for New Zealand lamb is very strong in our major overseas markets. It would be reasonable to assume that with the UK recession really taking hold, this would have dire consequences for the New Zealand lamb industry. It has not. We have seen strong demand coming from the UK right through this recession, and we have been moving a lot of product to that part of the world. The big problem for our New Zealand lamb industry at the moment is all about the currency. We have seen the New Zealand dollar appreciate strongly against the pound, and this has been eating into local margins. Based on our currency forecast, this is going to be a big problem for the lamb industry for this season. However, with the dollar likely to depreciate against the pound in time, the medium to longer term prospects are good.